Let's take a look at what happened with Tesla today. It is 8 p.m. Eastern Time. We have the post-market numbers that are starting to come out. Tesla closed at 332.56, up 45 cents, 0.14%. This is the close at 4 o'clock Eastern Time. Now, as I said, we have the post-market numbers, and we are at 318. So let's look at both these numbers in terms of our patterns. So this is the candle that we had today. Technically, it was not a bad day. We have been above 326.34 for the past 3 days. We could not break above 335.73. Because of that, we did not buy. This is why we have these lines. They are telling us when it makes sense to buy and when it makes sense not to buy. If you bought Tesla today because of the earnings, it was just speculation because nothing in technical analysis was telling us that it was the time to buy. It was not looking bad. Stochastic was over 60. We had the DMI that was positive, and our stock EMA reversal indicator was positive, but these indicators were bullish, but we never broke 335.73. Hence, we did not buy. The post-market numbers just disappeared, but we were at around 318. I have to say, it's not too bad because only yesterday, our low of yesterday was at 321, and the post-market, as I said, were at 318, so just a little bit lower. So I think this is not super bad. Our main congestion zone is between 372 and 295. And the post-market number are right here. And this is a smaller congestion zone within the big one. I think we have some possibilities of having some move up in the morning tomorrow. And if we take a look at the earnings, we have some positive earnings. So Tesla has reported 0.4 and the estimate was 0.397. So, it's 0.7% higher. This is a surprise. In terms of revenues, we are at 22.5 versus an estimate at 22.28. So a surprise of 200 million, 0.97%. So not too bad. This is a positive earnings. Now, everything hinges on how Elon spun the whole thing. So I am eager to watch that tonight to see how he spun the whole thing. But at first view, we could still be barely above the 21-day moving average. So that would be a feat in itself. So let's take a look at the rest of the market. VIX is down by 1.13. We are at 1536, extremely low. This is very positive for the markets. 20-year bonds moving up a little bit. The 10 years also a little bit, but nothing dramatic. Dow Jones, look at this, 1.14% up. So Dow Jones is starting again. We started making some lower tops. Boom, this is a bullish pennant. Then boom, we have a nice move up. And we are going to be testing 45,075 right here. We could not break that. We tried in February. We tried in December, so we are going to try very soon in July. If we break, this is going to be another push for the stock market. SPX continuing higher. Look at this candle. We are hugging this resistance. This is very nice. NASDAQ also a nice day. Russell just at 0.07% down, but if we look at the lows, we are still higher than where we were yesterday. Let's take a look at Bitcoin. So Bitcoin, we are still into a congestion zone. We are stuck between 115,206 and 121,105. This is where we are. Once we go here, this is going to be another buy signal. Ethereum, like I said this week, we are getting close to resistance. When we get close to resistance, it's possible that we cave in a little bit. I think this is only temporary. This is only temporary because this was pretty vertical, and something vertical does not last a long time. And we are still quite far away from the 21-day moving average. So I am expecting a move down to at least the moving average, if not a little bit lower, and then a possible resumption. And that would give us a nice bullish channel to start to follow and ride. Let's take a look a little bit at the report. So total automotive revenue, so we are at 16 billion 13 billion in Q1, but still year over year, we are down 16%. Energy, pretty much in line with Q1, but a little bit lower year over year. Services and other revenues, this is increasing. This is 17% year over year. In terms of total revenues, yeah, we are 12% down from Q2 of 2024 at 22 billion. Gross profit, we are down 15% from last year. Gross margin, 71 basis points lower than last year. Operating expenses, a little bit higher, so a little bit lower than last year. Income from operation, this one is pretty bad. We had 1.6 and we are at 923 million. This is 42% down. Operating margins, 4.1% versus 6.3%. We cannot say that things are very rosy. Adjusted EBITDA, 3.4 versus 3.6, 7% down. And net income, yeah, let's go to earnings per share. So reported 0.33. In Q1, it was 0.12. This was really abysmal. So 0.33, 18% lower than the 0.4 we had last year. 0.4 non-GAAP compared to 0.27 last quarter, but still 23% down from last year. The capital expenditure, this is a little bit less, so that's good. The free cash flow, look at this, wow. The free cash flow is really bad, 146, 89% down. So in terms of the explanation, total revenue decreased 12% year over year. Revenue was impacted by the following items: decline in vehicle deliveries, lower regulatory credit revenue, reduced vehicle average selling price, decline in energy generation and storage due to lower average selling price, but the positive, growth in services and other. In terms of profitability, so this is operating income decreased 42% year over year. Wow. Resulting in a 4.1 operating margin. So the impact, the credit revenue, operating expenses, they have done some restructuring driven by AI and other R&D projects. So they are investing heavily in AI and the robotaxi, I would dare to say, and maybe that new car. Decline in vehicle deliveries, increase in SBC, and then the positive. Decrease in restructuring charges, lower cost per vehicle due to mix and lower raw material, partially offset by a lower fixed cost absorption and increase in tariffs. Growth in energy generation and storage gross profit. In terms of the cars, let's talk cars. Model 3 and Y production, we are at 396,000. A little bit better than last year. Other models, 45% down. Total production, 410. This is pretty much right smack on where we were 1 year ago. In terms of deliveries, that was less. Other model deliveries, that was less. So total deliveries, 13% less. Total end of quarter operating lease vehicle count, a little bit higher. Global vehicle inventory, days of supply, we are at 24. So this is increasing. The sell-through is a little bit less. The storage deploy, still better than last year. At least we have that. The superchargers are increasing. The mobile service fleet, this is a little bit less. Supercharger stations increasing. Supercharger connectors increasing. So there you have it. Let's never forget that these are the facts that we have just read. But sometimes the market reacts differently. So we'll see tomorrow if we are going to be opening at 318, which is not too bad considering everything. But that would put us back where? It would put us back into our downward channel right here. So that's the sad part. We would have the candle right here. So stay tuned. We are going to look at this all over again tomorrow after the close. So thank you very much for watching. Thank you for liking, commenting, subscribing. If you like what I do, you can become a YouTube member. Click on my TradingView affiliate link. I'm going to wish you a great evening. We are going to talk tomorrow, and I'm going to tell you à la prochaine.